What is refinancing your mortgage? What does it entail? And should you be considering refinancing your mortgage? For those of you guys that don't know me, my name is John Cams, also known as Mortgage Unk. I've been a mortgage lender for 25 years. Let's go ahead and get into this. Refinancing your mortgage is not to be confused with modifying your mortgage. Modifying your mortgage is when you simply go to your current mortgage servicer and ask them to give you better terms than you currently have with keeping the same loan, which is known as a loan modification. Refinancing your mortgage is when you go and apply for a whole new mortgage with better terms or helps you achieve a certain goal you're looking to achieve, but you are going to utilize the mortgage we get you to pay off the existing mortgage, hence refinancing. And there are two types of loans when you refinance. One is known as rate and term refinance, and the other is known as a cash out refinance. Rate and term refinancing is simply defined as refinancing to get a different rate and or term than your current existing mortgage. People typically do rate and term refinances to lower the interest rate if they can get a substantially lower interest rate than what they have right now, or they lower the term. Not everybody refinances just to get a lower interest rate and a lower term. Some people actually refinance into even a higher rate. Something like, oh, I've got a 15-year mortgage at 6% right now, and I can't afford the payment, so I'm going to refinance to 6.25% on a 30-year mortgage so that the payment will go down. So as long as you are not taking more than $2,000 out of the transaction at closing, then this is what they would consider a rate and term refinance. If you are considering if you should do a rate and term refinance right now, meaning you are not looking to go to from a 30-year to a 15-year, I would generally say if you are over 7% right now on a 30-year fixed mortgage, you should be exploring refinancing. If you are interested in going from a 30 to a 15-year, then if you are at 6.5% or higher, I think it could make sense for you to explore looking for a rate and term refinance. Otherwise, unfortunately, interest rates really aren't low enough right now for it to make sense. And the other type of refinance, a cash out refinance, would be defined as you getting more than $2,000 back at the closing in cash in hand. So let's just say you owe $300,000 on your current mortgage. You end up refinancing and you get a $400,000 mortgage to pay off the $300,000 mortgage you have, and you get $100,000 cash in hand minus your closing costs. This is great for people who want to get money out of their current equity to consolidate debt, pay for kids' college, do home improvements, and is not to be confused with an equity line of credit, as you do sacrifice whatever interest rate you have on your current first mortgage with a brand new 30-year fixed mortgage, 20-year fixed mortgage, 15-year fixed mortgage, whatever you decide to do with a new one that gets you your cash out. With the recent drop in interest rates, people are no doubt taking advantage and refinancing their mortgage. Prior to the conflict with Iran, mortgage refinances were up 130% year over year. And since the conflict with Iran and rates spiking a little bit, refinances are still up 60% year over year. So if you are considering refinancing your mortgage to see if you can get a lower rate or a lower payment or a lower term, or just save some money, we would be happy to help you. Or if you're looking to refinance to get money out, to consolidate debt, to help pay for kids' college, to do some home repairs, we can help you do that too. And we will give you a comprehensive, holistic analysis, no cost, no obligation, to determine whether or not it makes sense for you to actually refinance. I hope this helps. Let me know, as always, if you or anybody you know needs help buying, selling, or refinancing a home. Make it a great day.